Okay. Hello, Will. A crazy time in the markets and some, as we were just discussing before, some unprecedented things have been occurring in market as well. What's your opinion on the last week and over the last month of what we've been experiencing?
Well, so Jim, I think we have to use that word unprecedented, a lot more. And let's just live where we were exactly a month ago. We had the Australian share market on a record high. We had global share markets on a record high. We were aware that there was a virus in China, but on this day, only 1 month ago, the first piece of news came out that this health crisis had moved to another country and that infected cases were on the rise. And now, in only 1 month, which is such a short space of time, our share market's down 33%, and other unprecedented things happened this week as well. Australian government treasuries weren't trading at the start of this week. So AAA rated paper issued by one of the most trusted governments around the world, that there weren't any buyers and sellers transacting in the market. Absolutely amazing. And credit markets absolutely froze. We had Fortescue come in and see us on Tuesday this week, and they said, hey, we wanted to borrow some money to expand one of our mines. They said absolutely no takers anywhere around the world. No one would lend us any money.
Wow.
And they said the iron ore price is good. There hasn't been a single shipment turned away by China. They're very happy with the iron ore price. And they said if they continue business as usual, they end up with $50 million sitting on their balance sheet by the end of June. But no lenders in this market, credit markets absolutely frozen.
Shut down. Has anyone ever seen anything like this in markets over the last 100 years?
We've never seen this. Obviously, there was the Spanish flu that came out of World War I in 1918. That was a global pandemic. But you can imagine we didn't have air transportation the way we do now. The spread of that was just so much more slower. But there just isn't anyone alive today that can apply those experiences to investment markets. Like 100 years, the human memory of that, how people dealt with that, how they resolved that, that's gone. There is no manual to follow on what we are experiencing today. It is unprecedented.
This week alone has been another unprecedented event. Let's talk through this week.
So this is amazing, and I think it's a great idea, Jim, that you had on making this the focus of our call, because I have not ever seen this in my 15-year advising history, nor is my sort of 12 years before that being a chartered accountant, working around the world. But I'm holding an Australian Stock Exchange announcement from the Commonwealth Bank, and I think this is so important, forgive me, but I am going to read this for you. So,
excellent.
From Matt Corbin, Chief Executive Officer of CBA, Commonwealth Bank. These are unprecedented times, and they call for unprecedented measures. Like I said before, I don't think we can use that word enough. Following today's reduction in the official cash rate by 25 basis points, 0.25%, we're taking deliberate steps to further support parts of the economy most in need. In particular, we want to ensure that we keep small business open so they can keep Australians employed, and that we do everything we can to support households and older Australians. Now, you and I have been alive for a fair while, Jim. At this point in time, you're thinking, here is another bank just paying a bit of lip service.
Yeah, right? Sure. Especially after last year's commission.
Yeah, look, we've had financial planning scandals, we've had AUSTRAC scandals, fees for no service and things like Australian society feels that the banks have really been letting them down. Unprecedented times. Commonwealth Bank is announcing a 100 basis point interest rate reduction for all existing cash-linked small business loans. So, right, there's been a 0.25 point basis cut by the Reserve Bank. That has been passed on, plus another 1% rate reduction.
Wow.
Absolutely unprecedented. Further, Commonwealth Bank is giving a 70 basis point interest rate reduction, once again, well ahead of what the Reserve Bank cut was, for all 1, 2 or 3 year fixed home loans for owner-occupiers paying principal and interest to 2.29% per annum. So it doesn't matter what product you're in, whether you're a new or existing customer, if you wish, you can move your loan to a 1, 2 or 3 year fixed home loan at 2.29%.
This is fantastic.
That is amazing. Now, I think this next bit is even more amazing. So, we've just had that 0.25 interest rate cut by the Reserve Bank. Okay, listen to this. Despite that, there's going to be a 60 basis point increase in 12-month term deposits to 1.7%.
Wow.
So it's meant to be going down at least 0.25 the other way, but they're going the other way and increasing it by 60 basis points. Now, they say later in the announcement in a lot more detail that this is mainly for older Australians, pensioners, who actually live off the income from the term deposit. This is aimed for them. But here is a bank not following the Reserve Bank down.
Being generous.
Extremely generous. And moving it absolutely the other way by a multiple of what the cut was in the other direction.
So Will, do you think we'll see the other banks rallying to take this on board as well?
Yeah, I think Commonwealth Bank's providing the clear leadership here. My understanding, and I haven't read this announcement yet, but I believe in some aspects the announcement just made by the ANZ Bank may even have more generous terms than what this announcement does.
That's so good.
And certainly I think the Reserve Bank made an announcement of support to share markets on Monday, but there was no detail attached to that. I think they want to sit down with banks and discuss this all with them, and then they actually want to leave it up to the banks as a competitive marketplace. You guys come up with your own policies, but competition amongst you, should make this a really good deal for all Australians, and it's sounding like a really good deal. So
outstanding. Australians finally being put first by the banks. I mean, that's an outstanding outcome.
Look, it is just unprecedented, and this announcement goes on. So the changes to home loan repayments will release up to $3.6 billion in cash for Australian households. They will waive merchants' fees, waive withdrawal fees, waive early withdrawal fees on business term deposit accounts. They don't have to do that. By law, they can charge fees for all this. They're deferring repayments on vehicle and equipment finance loans. So all those businesses that are going to suffer with less business, or even maybe a month or two of no business because of businesses shutting down, complete deferral of repayments on vehicle and equipment financing. Fantastic.
Excellent.
The statement goes further. We're strongly supportive of the RBA's new funding facility. So the RBA is making $90 billion available to our banks at 0.25 of 1%, which the banks can have as long as they're able to go and lend it.
Fantastic.
So if they can get it out there, find a business to lend it to, the banks can have it at 0.25 of a percent, and that's meant to be incentive for them to get it out there as soon as possible.
Oh, absolutely. Government and RBA and the banks all working together to help stimulate and create a better outcome for everyday Australians. It's fantastic. Absolutely amazing.
Mind-blowing, unprecedented, they're the words that we have to use, but everyone is coming to the party here to make sure that Australia gets through this and in good shape. And I think a lot of these measures, are going to be replicated overseas. This is everyone coming together for the best possible solution to keep Australians employed, and keep them spending.
That's fantastic. I feel better having had this conversation with you, hearing this news.
Look, it does. It's really amazing, and I think there will be a confidence point that we will cross, where people will take the horse blinkers off and maybe stop worrying, about some of the bad news that is going to come over the next couple of months. Shutdowns, people at home, infection rates, schools closing. There's some bad news coming over the next couple of months, but get people looking through that, working together, supporting each other, supporting business. I know some of our favourite restaurants here in Brisbane, which have never had takeaway, have said we're going to provide a takeaway service. We like the restaurants. We want to support them through this. We want to make use of that. Spending will keep these businesses alive. Spending will keep people employed. Spending will make sure that there's a business and a job for people as we get through to the end of this. So, the appeal here is, if the banks are saving you money by doing this, please spend it and get it into the economy. Get it working for the benefit of the economy.
And call up the restaurants directly, guys. That's the other thing, and get the delivery direct from there, because a lot of the delivery services keep a big chunk of the fee that you pay. So if you want to support the business direct, call the business direct.
Absolutely. Our favourite Indian restaurant told us that these people take about 40%.
Wow.
40%. They're the ones that are making the food.
Yeah. My goodness.
But they take 40%, in the delivery of that food to you from your favourite restaurant. So,
wow.
If you want to support the Australian jobs, call
Pick up the phone, call them direct, just to get off these apps. That's awesome, Will. Thanks so much for that. I think that really does inject a jubilant mood into the market. You think you'll see some effects for this next week?
Yeah, I think it'll come around. The difficult hurdle for the market, to get over, Jim, from this point is, just the recognition that for most businesses, we're going into a deteriorating environment. Like, normally we want to make an investment and we want to see things with that business, get better. But here we are, we're heading into what we know is a deteriorating environment. And the uncertainty coming from that environment, that's where all this poor pricing, in shares, that's where all these poor pricing in fixed interest markets and credit products, that's where it's all stemming from. This uncertainty of, hey, we've never seen this environment before. This has never happened before. It's unprecedented. No one knows what's going on, how long this is going to take, when things get shut down, when things get reopened. That sort of uncertainty is leading to a lot of the negative pricing that we've seen. But markets always overdo this. Fear is always overdone. You've just had a Prime Minister constantly telling you, stop buying toilet paper. You don't need it. You're okay. We can manufacture our own toilet paper. You're actually depriving toilet paper from someone that actually genuinely ran out. And
crazy human behaviour, just deplorable, really.
That sort of, strange human psychology, has played itself out in share market pricing and credit pricing. And we need to get the horse blinkers off here and stop worrying about whether you'll have 90 rolls stacked in your cupboard next week of toilet paper, and start looking out to 2021 and saying, right, this health crisis will have passed us, and what does the world look like? Well, here we go. We are going to have the lowest interest rates ever. You're going to have government stimulus packages. Trump's talking $1.5 trillion.
Wow.
We are talking billions and billions of dollars over here. China's doing the same thing. All this stimulus by governments is all going to hit the world at around the same time. At the same time, you've got the lowest ever interest rates. This is going to be something really incredible. So take the horse blinkers off. Don't be so concerned about the next month or two. We will get through this, and start looking ahead to just how good things are going to look as we enter 2021. And that's really where people need to focus.
Perfect. Well, that's awesome. Thanks so much. I'll be shooting this out to all of our clients and putting it on social media. So it'll be an interesting listen, I hope, for people over the weekend. And really, really appreciate your time, expertise. I know you've had a grueling week, an exciting one at the same time. So that's awesome. Thanks very much, and look forward to having a chat with you next week.
I'll also give a quick plug, Jim, to the economic update that you've organised for Tuesday next week. Now,
absolutely, yes.
Once again, we're not sure if the offices are going to be open or not, so but we will definitely go ahead with a call if nothing else. So quality might be a little bit down on this one, but the message is going to be really strong. The only other main point to get across to people is, that the actions that you take now over the next few months, relating to your investment, are going to set up your returns for the next 3 to 5 years.
Absolutely.
That's really important. We want to do something. We want to do something positive. We want to do something with a 3 to 5 year review, because now is the time to do it. Over the next few months, we'll be making moves that will set up returns for 3 to 5 years.
That's outstanding. And it's the opportunity to do it right now when markets are so cheap, right?
The opportunity has never been better for more than 5 years.
Love it.
Never been better.
That's fantastic. Well, it's a great way to enter the weekend, mate. So thanks very much for your time.
Right. Cheers, Jim.
Thanks, Will.
Bye.